Hey guys, welcome back. This is StockBroc. Today I'm going to be talking about key principles that Warren Buffett lives by in investing and how you can make it yours as well. So let's kind of dive right into it. Number one is never lose money. Buffett's most famous rule is to prioritize capital preservation and be wary of unnecessary risk. Rule number one, never lose money. Rule number two, never forget rule one. So basically, it's focusing on not investing in dumb ideas. This is basically going to principle number two, is invest in quality businesses. Look for companies with strong fundamentals, consistent earnings, durable competitive advantage, economic moats, honest, capable management. So you got to really do your deep dive and digging to learn this about a company, especially if you want to learn about their honest and capable management, because there's not too much you can learn about them on Wikipedia. So you really do have to dive into the annual reports for the company, see where those executives may have worked at, and really take a wide perspective on how the company's been operating, and if the company operates honestly, has that competitive advantage, and earnings are consistent. So I think those are the three big key drivers to kind of look out for when you're doing your research on management. And then another principle is buy at a margin of safety. This is where you're doing your valuations on a company, running your numbers and knowing where your margin of safety to possibly get out of stock or to take profits. Only buy stocks when they are trading below their intrinsic value to leave room for error and unexpected outcomes. We get things that happen, panics, we get 2020, COVID. So you always want to buy at a margin of safety. So you want to do your valuation models. That's where you can see if the company is trading at or below intrinsic value or even above it. So this is where you want to run your numbers, of course. But if you take a look at it, all three of these, you are really diving deep and learning about the business. This is not no invest, get rich type scheme. It's a really for the long term. And principle number four is think long term. Buffett's favorite holding period is forever. I know a lot of us don't want to think of that, but I think a good holding period is at least 5 to 10 years. At least 5 years for sure, but forever is also good as well for some people. Ignore short-term market noise. We have a lot of market noise at the moment. A lot of people are coming in to buy the dip, so those people are not afraid and they're ignoring the short-term market noise. And a lot more people are getting more trained to that, so be careful. Focusing on the business's potential for long-term growth. Another principle number five, stick to what you understand. So Warren Buffett never invested in technology companies because he didn't understand it. So he really stuck to what he knew. He avoided investing in businesses that he didn't understand and stayed within his circle of competence for better decision making. Bought companies like Hershey's, See's Candy, Coca-Cola. That was his circle of competence. I guess he was a customer of them, and he does mention that. Another one, principle number six, patience and discipline. You want to be patient, you want to be disciplined. Sometimes the best action is no action. Kind of like how we said, if you had a punch card and you only get 20 punches to buy something or sell something, I think that's a really good metaphor for this. Stay on task and wait for the right opportunity rather than forcing investments just for the sake of it. You don't have to just buy stock because you feel like you need to invest. Do your homework, do your research, and really be prepared to buy. Principle number seven, value over price. Price is what you pay, value is what you get. Focus on the long-term value a company provides, not just its current stock price. So if you see a company that could be worth more in the future, boom. You see a company can't really see too much upside from here, why are you going to invest in it? And principle number 8, emotional control. This is my favorite one. Stay rational, avoid emotional and investment decisions. Be fearful when others are greedy, and greedy when others are fearful. Thanks for watching StockBroc. This is Warren Buffett principles to live by in investing. Thanks guys for watching. Peace out.